Good morning and welcome to my daily report market videos with me, Richard Perry, market analyst at Hantec Markets. On Friday the 24th of May, we've had a significant move across markets in the last 24 hours. We've seen a significant turnaround actually on the dollar, that dollar index, which actually pushed out to highs not seen since 2017 yesterday on an intraday basis. Then you had the US flash PMIs that were very, very weak, and suddenly the dollar started to correct back. We've seen that euro dollar's bounced 70-80 pips from its levels of yesterday afternoon. Sterling dollar bounced, dollar yen's sharply lower, and also we saw a big move higher on gold. Now, the very interesting question is, are these moves going to continue? I'll sort of take you through my chart analysis in a bit, but certainly I think that some of these moves that we've seen could still just be near-term moves. The selling pressure came through equity markets also yesterday. A little bit of a rebound today, but look at this move that we saw yesterday on the S&P 500. Big sharp move to the downside. I've spoken previously about the prospect of this turning into a head and shoulders top pattern. Now, obviously 2,800 is your first support, but 2,785 is key support there from that old late March low. So these levels need to be watched, but certainly at the moment we've seen a positive reaction on equities today with US futures trading higher, and that's reflected through the European markets as well. But are these equity markets on the brink of having a sharp move to the downside is the question. In terms of data points we've got today, well, aside from the data points, we've got Theresa May, who is likely, all the expectation is that she's likely to this morning lay out a proposed departure date for her end of her prime ministerial position, and she's come under increasing pressure in recent days. And how is that going to play out to sterling? Sterling has been very weak recently. It'd be interesting to see if you start to see a bit of a reaction higher on sterling as the sell on rumour, buy on fact comes through. But certainly the political uncertainty in the UK at the moment has been weighing on market sentiment, and sterling has been a real significant downside move, but a little bit higher today. Right, so in terms of data points, we've got UK retail sales, which is just coming out as I speak. Let's see where it's at. Sorry, it's all the way up here. Where are we looking here? Oh, come on. UK retail sales has just come out, and it's been better than expected. Slightly better on the ex-fuel month-on-month, slight decline, but retail sales on a year-on-year basis holding up fairly well, still 4.9%. So that's going to be sterling supportive. But to be honest, the market's looking at bigger fish to fry, I think, with the Theresa May decision. Now, this afternoon, we've got US durable goods. Ex-transport expected to see a plus 0.2% growth on the month this afternoon. Now, my chart of the day is euro yen. Now, we have seen the yen strengthening, and it's interesting, strengthening in the last couple of days as the risk appetite has fallen away. Little bit of support today, but look at this move on the chart. The failure of the rally earlier in the week, the failure in the overhead supply between that key reaction low around 23.40 up to 23.75, all these lows form a key reaction, key overhead supply. And where do we see the reaction high? 23.75 area this week. So they're falling away. That's overhead supply forming a downtrend in the last month or so. We've also got negative configuration across momentum indicators. RSI failing at 40, back underneath. We've got the MACD lines. Are they about to bear kiss lower? Stochastics have crossed lower. So it all points towards selling into strength on this euro yen. Now that support initially comes in at 22.05. That was pretty much hit yesterday, but survived that initial test. But a close below 22.05 would really put 120 big figure back in the spotlight. And to be honest, there's not a great deal of support to which holding that can hold up the market. And as you can see, that we saw back in earlier in the year, where you saw the spike lower. So once that support gets broken, it could well go very quickly to the downside. So that would be the fear. That would certainly come in the position of escalation of any sort of trade dispute or geopolitical risk. That would come with the yen strengthening. So that in mind, I wish you good luck in your trading today, and I will speak to you later.